Minasama, Ohio gozaimasu. Good morning, ladies and gentlemen. It's indeed my pleasure to be amongst this distinguished group in this, my other home city. When I was at the University of Oregon in my doctoral program in finance, I did a number of courses on economics. And it's at that time I realized, and with all due respect to my economist friends, it's at that time that I realized that a microeconomist is someone who is wrong about the details, the small stuff. And a macroeconomist is one who is wrong in general. And I'm sure that's the reason why Jim Lawrence and Kevin Oates felt, how much worse can it be to have a ship captain make this presentation on Abenomics? It's funny, just last month I was at this conference, and after a long rendition on economical historical trends, somebody raised their hand and asked a question: how has the US revolution impacted the US economy? And the economist thought for a while and said, it's too early to say. But let me ask you a question of my own. By a raising of hands, could you tell me how many of you believe that Abenomics is going nowhere? There's only one. Well, then you will identify with these graphics. And by a raising of hands, how many of you believe that it's stormy out there? And the jury is still out. It's difficult to say whether we will get there or not with Abenomics, or that Japan will get there. Yeah, many. And how many of you believe that the three arrows of Abenomics, or the three pillars of Abenomics, of monetary easing, fiscal stimulus, and monetary and structural reforms, will finally hit their target? Well, very few. But there are. This is just an informal survey, but there are many informal indexes which are used to get a feel for where people are or where the sentiment is. One of them that you're probably familiar with is the Big Mac Index. It was devised by the Economist publication in 1986, and it helped to kind of gauge where PPP, or this personal spending parity was. So you're probably familiar with this index. There's another index which is unique to Japan, and it's called the Shiseido Economic Index. It has been 25 years since a bright red hue such as this was popular in Japan. That was in the 70s and the 80s, when Japan was considered to be the economic miracle of Asia. Right? Then in the late 80s, the notional values across the economy was so inflated, and debt levels were so high, that even a modest tightening of the monetary policy caused the bubble to burst. Since then, it's been almost economic stagnation. Households and corporations have focused on debt reduction and have been slow to make investments or spend. The consequence of that was deflation. And Shinzo Abe, the current Prime Minister of Japan, took the view that deflation is largely a monetary phenomenon, and that it could be addressed primarily through monetary means. And therefore, we have the first arrow of Abenomics, which is quantitative easing, or the printing of money and buying government bonds and other financial instruments, which amongst other things will of course increase the money supply and cause the value of the yen to drop. in the past 4 years, despite the recent strengthening of the yen, in the past 4 years, the yen has depreciated about 36% against the US dollar. Had we done this comparison a little earlier in the year, it would have been closer to 50%. So the yen was relatively weak. And isn't it ironic that of all the coinage in the developed world, the yen is possibly the only one that floats? And we being here at marine, money, ships, we like things that float. Now to compare, I said the yen depreciated 36%. In that same time period, 4 years, the Chinese yuan only depreciated 3.2%. So that gives you a kind of a comparison. And of course, with the yen depreciating, it gives Japanese companies a big advantage in the export market. In fact, analysis by the Bank of Japan show that the yen, from a trading perspective, is at its lowest level since 1985. And that takes us all the way back to the Plaza Accord, when a group of industrialized countries got together and decided that they would take measures to strengthen the yen. So this was way back in 1985. Since 99.7% of Japanese exports by weight are transported by sea, the jump in exports is really beneficial to international shipping. Of course, this has happened at a time, if you would see the Japanese exports over the last 4 years, it has increased 25% to 6.5 trillion yen per month. So it has been increasing. And this has happened despite the fact that we are in a slowing world economy. And despite the fact that the Japanese companies have chosen to maintain their US dollar price or their foreign currency pricing of their exports. So they chose to increase profits rather than gain market share. So this has happened in a slowing economy. It would have been, of course, a lot better had the economy been moving faster. Which reminds me, not that long ago in Netherlands, there was a Dutch economist who, and some of you may have been there at the presentation, and he said, I don't realize, why is everybody so obsessed with growth? Netherlands in the 18th century, they did 100 years with zero growth. And yet, Netherlands is one of the wealthiest countries in Europe. So whatever the rationale behind that line of thinking, in the integrated world that we now live in, we all have a shared interest in raising our common economic standards. And from an international trading perspective, unless we have strong growth, we won't have the vibrant shipping industry that we have and will need. So, moving on, of course, the other industry that's benefited from the weak yen is Japanese shipbuilding. Of course, supported by Japanese banks with attractive financing solutions, which has therefore made Japanese investment in Japanese built tonnage an attractive investment once again. In fact, the premium now for Japanese built tonnage is probably less than 5% compared to values in China and Korea. And of course, the numbers say it for themselves. If you see the contracting in China last year compared to 2014, down 26%, compared to 2013, down 52%. While if you see in Japan, they built their order book by over 20% in 2015. And this is despite having to try and broaden their product offerings so that they move out from bulk carriers. And since they haven't done this by reducing their pricing or trying to gain market share, obviously profitability is up. I've just given one example here of Nomura Shipyard, They 2 weeks ago announced that their outlook for the coming fiscal year, their profitability will be higher. It was 3.7, now it will be 7.2 billion yen. But all is not well with Japanese shipyards. They face severe shortage of skilled labor. During the downturn some years ago, they lost a lot of their skilled labor to reconstruction projects following the tsunami. Then there was building of railway lines, and now, of course, projects involved relating to the 2020 Tokyo Olympics. So for Japanese shipyards, the fact that Shinzo Abe's Liberal Democratic Party in their election manifesto said that it is essential to build the foundation of the construction, transportation, and shipbuilding industry has been a real boon. Because Japanese yards have got government-backed financing for projects in Paraguay, China, amongst other places. Moving on from yards, of course, even Chinese marine equipment manufacturers, spares, have benefited from the lower value of the yen. But in addition, they are operating in a local domestic market where there's almost zero inflation and very low wage growth. So as a result, it has been really good for them as well. Moving on to the financial environment. It's not really good for the demographics haven't really supported the Japanese GDP growth. You have a situation where 25% of the population is over 65 years of age, and at the same time the birth rate is declining. I mean, compare this with the rest of the world. Did you realize that it took countless millennia for the world population to reach 1 billion in 1840? Then it took 90 years to reach 2 billion, or double that. The third billion took only 30 years. And since 1960, we have more than doubled that. But here, you have a situation where the financial institutions in Japan, as a result of QE, is now flush with liquidity and looking for profitable avenues to deploy their funds. You have GDP growth which is stalled. You have a population that is decreasing. You have Japanese government bonds, which is not really an avenue for your investment because you can see from the table and you see the comparison to the US. So, is it no surprise that Japanese banks are attracted by international shipping and the margins the industry offers? I mean, last year we saw the establishment of a joint venture between Sumitomo Mitsui Trust Bank and Credit Agricole, Seabridge Finance. But even more importantly, it's the smaller regional Japanese banks that are making their very first loans to international shipping. Perhaps this is not a financing that's available to everybody. A prerequisite appears to be that you have had prior good record with the major Tokyo banks. So, with so much of cash in the balance sheets and cash equivalents on the corporate Japanese balance sheets, should be no surprise that M&A activity is now at record levels. You can see the outbound record that is achieved by Japanese firms last year. You know, most of M&A activity, except those that are in our industry or in household names that we recognize, is what we observe. The rest of it goes under the radar. Let me give you this example of the FTSE 100. The FTSE 100 was established in 1984. And a question, of the 100 companies that were in the FTSE 100 in 1984, how many of them are still in the index today? Anyone? Like take a guess? 29. So you may want to pause to think, what happened to the other 71? Yeah. So in merchant shipping or in Japanese shipping companies, there have been no major acquisitions or mergers. Although we had Keymax and Misuga Ship Management merge in 2014 to create what was the largest, one of the top 10 ship managers in the world in terms of number of vessels managed. We also saw the insurer Mitsui Sumitomo acquire Amlin, which is a UK listed company, who through their subsidiary Rates Marine offers P&I products to international shipping. Of course, there are recent developments in the economy that have cast a shadow over Abenomics. This year, despite the negative move to negative interest rates in January, we still see that the US dollar has appreciated, I think till yesterday it was 9.9% versus the yen. We have a situation where last quarter last year, economic growth was negative. Wages are increasing almost at a very minimal rate. And in such an environment where you have low or non-existent inflation, very low wage growth, consumers just don't spend, and consumers account for 60% of the Japanese economy, consumer spending. So consumers just don't spend in Japan. It's not like in America, where running out of money is not a reason to stop spending. You only stop spending when you run out of credit. You can't borrow anything. That's when you stop. So here we have a situation now, low inflation, minimal wage growth, no growth in the economy. Guess what's happening to the Shiseido lips? The color is running out. Right? See that? And now, the color now that is most popular is one very close to the natural lip color of the Japanese women. And guess what? This lipstick costs 800 yen less than its sassy red cousin. I checked. Any one of you have heard of this index before? No. So now remember, you heard it here first in Marine Money. Maybe a better name for this index, or perhaps a better name would be Marine Money Read My Lips Index. Of course, what's the outlook for the yen? Well, obviously it's strengthened recently, but I don't believe that this is going to continue. And there are several reasons for it. The current strengthening is probably due to an unwinding of the carry trade, where hedge funds delever and pay back their loans in the local currency. You also see a flattening and stabilizing of the Japanese government bonds yield curve, which suggests a rebalancing out of Japanese government bonds into riskier assets, perhaps. And the Japanese pension fund, which has over 1 trillion in assets, is now reallocating their asset allocation into riskier assets, both domestically and internationally, in order to boost returns. You know, returns have been very poor of late. So, and then if you look at the last 2-3 quarters, you see the outflow of currency from Japan is on the increase. So all this suggests that this currency is going to start weakening. And should there be more stability in the world economy and other major currencies, and Shinzo Abe will be successful in bringing together all the different parts of his plan, especially those relating to structural reform, we could well see the yen depreciating to 160 to the dollar in another 3 years. So, in conclusion, it may be fair to say that promising in theory and mathematics, the jury is still out on Abenomics, QE, and other monetary acrobatics. The start was promising. It sent the yen down spiraling, and corporate profits were flourishing. However, the sales tax, what's the date? However, the sales tax was met with bad blood, consumer confidence fell with a thud, and any optimism about inflation was a dud. The Chinese slowdown was not on the scorecard. Structural reform was opposed by the old guard, and fiscal spending may still be the trump card. Yet for shipping, with Abenomics, shipyards continue to grow ship by ship, exports continue to click, equipment suppliers are trimming their wick, investment bankers see deals coming in double quick, ship owners have learned the financial trick. So surely for maritime, it's time for the sassy red Shiseido lipstick. Arigatou gozaimasu.